All right, what is going on, guys? It's another bootcamp video. This is day 9, I'm pretty sure, and we're going to be talking about daily bias and drawn liquidity. So what is daily bias and what is drawn liquidity? So I have these definitions of my definitions of what I identify as daily bias and drawn liquidity. So daily bias is basically coming into the day and you're like, all right, are we bullish on the day or are we bearish on the day? Meaning, are we going to take shorts if we're bearish or are we going to take longs if we're bullish, right? We want to trade with the trend, right? Trend is your friend. You should always trade with the trend, all right? Drawn liquidity is where the market will draw to and where you will target for the day. So this is going to be any liquidity pool where you think the market is going to go. If we're bullish, we're going to look for, swing highs, unfilled fair value gaps on the higher time frame, equal highs, session highs, all that good stuff, right? And let's say we're bearish, we're going to look for lows to take out, and like session lows, unfilled gaps, everything else that I just mentioned for the bullish scenario. So how do we identify it? All right, this is how you find your daily bias, okay? And this will determine where your drawn liquidity will be, all right? If it's going to be higher or lower. So to find your daily bias, you ask two questions. Are we respecting or disrespecting fair value gaps, all right? And are we delivering from buy side liquidity or sell side liquidity, okay? So just to give you guys an example of how I go through my daily bias, I am going to show you guys how I walk through it just on a little back testing day, okay? And this is actually what I want you guys to do as well, all right? So let me just skip to market open, and then we can get into daily bias, okay? So, all right, these two questions, we start on the daily and then we work our way down, all right? It's called a top-down analysis, all right? So let's check right now. Coming into the day, right, we're going to look for, are we respecting or disrespecting fair value gaps? Well, I can see clearly that we're respecting this area, right? This, new day opening gap, as well as this fair value gap, right? We're respecting this, and we're disrespecting this bearish fair value gap, right? Making me think that, okay, if we're on bullish order flow, we should respect bullish fair value gaps and disrespect bearish fair value gaps. So that's exactly what happens. So I'm going to be more bullish, right? The daily is very bullish. Let's check the 4-hour now. Exactly. We're delivering. What are we delivering from? Sell side liquidity, right? And we are inversing bearish fair value gaps, right? Meaning that we're bullish. So we're sweeping liquidity. We're getting confirmation to the upside. So we should be very bullish, right? That's exactly how it works. So now where are we going to have our targets at? Buy side liquidity, right? Above, right? Buy side liquidity above. So now we keep working our way down, right? From the daily to 4-hour, you can go in the hourly, right? Now we identify, okay, where is the market drawing to? Market's drawing to this buy side liquidity, right? This is where price wants to go. Another word we can use for this is your draw on liquidity. Where does price want to go? It's got to go to this buy side liquidity, in accordance with all our other confluences, starting down from the daily, down to the hourly, down to the 15-minute. This is our draw on liquidity. So sometimes you're not going to always target the higher time frame draw on liquidity. However, you can target draws on liquidity on the lower time frames in accordance with the higher time frame draw on liquidity, all right? So as you can see, we have this higher time frame buy side liquidity, but price might not just dump or pump or dump towards this draw, right? It might chop around, get some manipulation in, and then later in the day it might actually achieve this, but we're trying to get a trade near market open, all right? So going down to the lower time frame and looking, okay, we're respecting this bullish for value gap. We're continuing higher, right? So and I don't want you guys to take any trades yet. I just want you to be correct about your draw on liquidity. So based on my confluences, the market is going to go higher. So let's see what happens, right? Boom. Right at market open, what happens? We take this buy side liquidity and look where we're going. We're going towards the draw on liquidity, right? So let's see what happens. Okay, beautiful, right? We come down into this 15-minute fair value gap, right? We respect it with this wick. And then what are we doing? We're continuing higher, and we continued higher and took this draw on liquidity for the day, all right? This beautiful draw on liquidity, right? I don't know why that got messed up, but we take this draw on liquidity for the day, all right? So you guys just saw me do my top-down analysis, right? What are we delivering from? Sell side, boom. Are we respecting higher time frame PD rates? Yep, boom. Are we disrespecting bearish PD rates, respecting bullish PD rates? Boom, boom, right? We found our higher time frame draw on liquidity, all right? We found our lower time frame draw on liquidity, right? Beautiful, beautiful, beautiful. And now let's see if you could have actually taken a trade towards this draw on liquidity. So there was an inversion on the 3-minute right here, right? There was an inversion on the 3-minute. So you could have taken this 3-minute, right? And put your stop below, targeted this. Would have been negative RR though, but you could have waited for a retracement, right? Let's say you put like a limit order right there, stop at the low, right? And you could have taken a trade in the direction of your bias and your draw on liquidity. So that's a great example of what your homework should be doing, right? You should be doing at least 5 examples of this, right? 5 examples. And make sure you actually understand where the market is really going, okay? Because putting all this stuff together is the main thing that I will eventually get into the strategy with you guys. But right now, understanding daily bias and draw on liquidity is very important. So let's get into your guys' homework for the day, all right? Your homework is to identify 5 cases of you correctly identifying the daily bias for the day and identify 5 cases of you correctly understanding the draw on liquidity. So that's exactly what I just did. You just got to do it 5 times, all right? Get those reps in, find a time, put it on your calendar for today. Okay, I'm doing this at 3 o'clock. Do it. I promise you this will help you actually understand where the market's going, where the liquidity pools actually are, where's your draw on liquidity, and where the market is going for the day. So you're not confused. You're not confused at all where if you're going to press long, buy, sell, short, whatever it is. All right. So this is day 9 of the boot camp. We're wrapping it up. All right. A lot more stuff to go through, I'll be honest. So this boot camp is nowhere near done, but we'll get to the strategy video soon enough where we tie all these concepts together and you actually are able to start trading on your own. All right. So that's it for today's video on the boot camp, and I will see you guys in the next one. Peace out, boys.